Welcome back to Bitcoin for Corporations, session 3. I'm here with Michael Moreau, the CEO of Genesis. This is going to be the Michael squared session. This is going to be great. Two Michaels at the same time for the price of one. So, Michael, introduce yourself to the audience and tell us about Genesis.
Happy to do it. And thank you for inviting myself and Genesis back for this. That's a fantastic event. So Michael Morrow, CEO of Genesis. We are an institutional only crypto firm providing prime services to hedge funds, family offices, corporations. And we have been in business now since 2013. So we are now entering year 9 in the crypto space, which is a very, very long time.
That's like a century.
That is several lifetimes in sort of non-crypto terms for sure. But we're headquartered in New York, but now we have offices in London. We have offices now in Singapore. And we'll also be adding office locations in several other places kind of throughout 2022. As far as kind of our size, we're at 30 people entering the pandemic. We are now at almost 200. So we've done, call it 6x, 7x in our growth in the last couple of years. And primarily we provide over-the-counter trading, derivatives, so options and futures. We have a borrowing and lending business, sort of a finance business that is the largest in the world in the crypto space. And we also have a custody business. And we really sort of aim to be the regulated, professional, institution only one-stop shop for clients looking to engage with Bitcoin and other digital currencies.
Okay. So can you describe a little bit about the nature of the products, the services you offer? I mean, these various trading services to corporations. Tell me what I can do if I post $100 million to my account with Genesis.
So let's start primarily for certainly on the trading side of the house. It is folks that are looking to get price exposure to Bitcoin and dozens of other like cryptocurrencies. We traded on the spot side of the house over $100 billion with our clients throughout 2021, and about half was Bitcoin. So even though there's obviously hundreds and hundreds of cryptocurrencies, and we certainly support the trading of dozens of them, over half was still kind of concentrated in Bitcoin. In addition, we did over 50 billion in derivatives throughout 21, and about 60% was also still Bitcoin.
Describe those derivatives for me so I understand what type of derivatives are they and where do they trade?
Most of the time, it is sort of plain vanilla puts and calls. We've started to transact in sort of some of the listed derivatives, so sort of CME products on the futures and options side of the house. And throughout 2021, we'll be getting involved in more sort of bespoke products as well and structured products. That's sort of on the roadmap, certainly for 2022. But for clients that are looking to get exposure to Bitcoin, that's one. Number two, once you purchase Bitcoin, what can you do with it? And kind of the ability to earn yield on Bitcoin has been sort of that growing narrative over the last few years. And we at Genesis, we launched kind of the first lending business back in 2018, so in early 2018, for the ability to take Bitcoin, post that as good collateral, and to be able to borrow, say, US dollars against your Bitcoin holdings, really creating a way for you to get liquidity without selling and triggering, tax consequences and things of that sort at various kind of loan to values and interest rates, as well as custody the assets for you. So ultimately, if you post $100 million to Genesis, you could go out and obviously buy $100 million worth of Bitcoin. You could also take some of that, take $100 million, get a loan against that as well, and do a levered position on your Bitcoin. You could take $100 million and lend half of it to Genesis and earn yield in terms of the US dollar play. as kind of like three different examples of what folks can do, kind of marrying kind of our liquidity on spot derivatives, borrowing and lending, as well as on the custody side.
So those futures, what's the duration of those futures? Are they 12 weeks, 6 weeks, 4 weeks? Do you have like things that go out a year or two or more?
So on the option side of the house, on the listed side of the house, a lot of the durations obviously kind of match what we're seeing on the CME markets, for instance. And so you'll kind of see the March, the June, the September, sort of the quarterlies. That you'll sort of see as kind of big ones, with kind of the monthlies kind of in between. A lot of on the option side, many of them are short dated. And although there are lots of people that are obviously looking to, to do kind of longer durated, options, and then say, like 100K strike price and giving that to me in 24 months, right? To kind of tie the Bitcoin to the moon narrative. But for the most part, for corporations and kind of the way they're thinking about it, tends to be more short dated. That's where the liquidity is.
So I could use those derivatives either to collar my position, or I guess I could use it to sell volatility and generate yield. Is there one or the other that people prefer? Are they using it to decrease volatility, or they're actually selling volatility to generate yield?
Most of the time, you'll see guys with sort of an underlying Bitcoin holding position, and then they're selling premiums and kind of calls against it, call overwriting strategies, to generate kind of enhanced yield. And if it gets called away, great, they'll just buy some more Bitcoin kind of on top of it to like replenish the holdings. And so it's a way for lots of institutions to generate that extra yield.
What kind of yields have people generated over the past year or two?
So we've seen on the yield side on the premiums, we've seen kind of in the 30 to 40% on an annualized area, especially. And then if you look at kind of the basis market, kind of the cash and carry market, arbitraging spot and the futures market, while it's muted today, kind of in that the price environment of come around 5 or 6%. Annualized out to June, we've seen that rate kind of get onto the 30s and kind of north of it, kind of in a bull environment. And so there's lots of sort of market neutral plays to be had without kind of taking that directional bet on the price of Bitcoin.
Yeah, that's got to be pretty enticing to a hedge fund or a trader.
Absolutely.
So can you describe your customer base, especially your corporate clients? Like what kind of firms do business with Genesis?
So we obviously started, as I mentioned, back in 2013. And our first clientele was kind of the Silicon Valley VCs, right? Kind of the high net worth individuals that had kind of Bitcoin as a technology play. Over the years, we've seen kind of rotation out of like the VCs and into more kind of the crypto native hedge funds to now traditional hedge funds. And then really kind of in the last 12 to 18 months, kind of the emergence of corporates. And what we've kind of seen, I think, is certainly kind of we hear MicroStrategy and certainly your name, Michael, kind of come up in many of the conversations that we have with the corporations, is that kind of say, hey, inflation hedge. Yes, inflation in the US is 7%, but the inflation in my home country, if you're in Latin America, is kind of in the double digits, well into the double digits, and say, hey, this is my alternative. This is my escape from kind of the traditional system, and a way for me to really kind of protect value outside of the traditional system. Now, we've seen, as I mentioned, Latin America, we've seen clients in Southeast Asia really kind of actively start to kind of take place and use Bitcoin onto their balance sheets. And that's kind of the fun part for me. It isn't just a US centric movement. It is kind of capturing kind of the attention of CFOs and treasurers and CEOs and boards around the world, which certainly corporations were not a client category 2 years ago, but they certainly are a point of focus for Genesis today.
So what jurisdictions do you do business in?
So we are, as mentioned, we're headquartered in New York, although we have clients in dozens of countries around the world. And so we have our custody business is registered with the FCA in the UK. We're currently working with the Monetary Authority of Singapore to get our proper license at the Digital Payment Services Act in Singapore. And then, but we have, clients really dedicated all over the world.
Okay. So if a corporation wants to do business with you, what's the journey?
So ultimately, and you would certainly kind of know this firsthand, Michael, the sales cycle to a corporate is very, very different than sort of a sales cycle to a hedge fund. And, for a
Tell me the differences.
Sure. So obviously the simple case is a hedge fund is two guys in a garage that already have kind of been bit by the Bitcoin bug and are interested in kind of getting involved. Corporations have departments. Corporations have compliance and legal and finance and accounting. And ultimately, while the focus is really on the trade, oh my gosh, you bought Bitcoin, what price did you buy it and how much did you buy it at? That really is like step Z, right? Kind of in the A through Z process of kind of getting started. And so the first conversations really kind of start with legal and compliance and getting those department heads ultimately comfortable. Then there comes kind of the finance and accounting teams. We've touched on kind of the accounting difficulties, certainly with Bitcoin on corporate balance sheets before. And really like the investments part of it is really kind of the last step. How do we custody this? How do we do this? It's all operations and processes and procedures. And if you're a public company, how do we disclose this? All of these things tend to happen. And frankly, like some of these sales cycles are 6 to 12 months, right? And a lot of these hedge funds, they're much more shorter time frame than that. They're able to kind of react quicker to it. But it's also different, I think, for corporates that are looking to allocate Bitcoin for the first time.
So I hear rumors that there's been like an avalanche of hedge funds coming into the space over the past 12 months. Can you give me a snapshot from your point of view of institutional interest a year ago versus institutional interest today and how the business looks?
It's really incomparable. So I mentioned that we did over $100 billion of spot volume in 2021. That is over a 300% increase year over year. The derivatives business, which we did 50 billion of, that's an 8x increase over 2021. And since we only really have institutional clients, our volume numbers are really kind of that barometer in terms of growth and scale, certainly on a year over year basis. Our loan business is now to $12.5 billion in loans outstanding as of 12/31. And that is basically a 2x increase kind of year over year on that front.
That's people pledging crypto assets, borrowing dollars mostly?
Absolutely. So there's many different use cases, with that being one of them. I looked up these numbers this morning. So we've currently borrowed about 110,000 Bitcoins from the marketplace. And we also have an additional about 40,000 Bitcoin that we've taken in as collateral against the loans that they've taken out for something else, call it like dollars. So call it 150,000 Bitcoins is in the Genesis system today, along with a bunch of other cryptocurrencies. And so, and I think it's also important to note that now we're getting to like big boy, multi-billion-dollar territory where financing against Bitcoin, borrowing Bitcoin is no longer so this new up and coming, maybe this works kind of a venture. It is very, very liquid. We originated $50 billion of loans in Q4. And so for corporations that are trying to figure out, okay, I bought this Bitcoin, what do I do with it? Or what are my liquidity options available to me? The institutional market around financing and of kind of, asset-based finance for Bitcoin is here. And certainly the system and the pipes are liquid enough to be able to support lots and lots of corporations getting involved.
Yeah, so you have a big asset on your balance sheet. Either you're going to be able to generate yield on it, or you're going to be able to draw a credit line against it, or both.
Mm-hmm.
Okay.
Absolutely.
Yeah, and I can imagine that with that kind of volatility and with the yields that the hedge funds can generate, they're probably going to want to get their hands on some of this asset or lever it up to do their trading strategies, right?
Absolutely. And I think we're now kind of getting to a point where like the scarcity is a real thing. The fact that the 21 million Bitcoins, we're now near almost 19 million kind of out
Right.
there in circulation, where people start to understand that there's not going to be that much more mined. There is a finite amount of Bitcoin to be there. And I think that scarcity angle actually starts to really matter a lot more as we get closer and closer to that 21 million number.
Okay. Very interesting. So what's your outlook for the Bitcoin marketplace for the coming 1 to 3 years?
Oh, certainly, 3 years ago, we were just kind of like coming out of that bear market, right? In 2018, kind of starting the 2019 market and just kind of chatting about the numbers at Genesis. It's certainly kind of incomparable from a year to year perspective. Here's the thing that I like the most is that talking about Bitcoin with institutional accounts and corporations is no longer weird. It used to be this almost taboo, like, oh
when did
my
it
God,
stop being weird, Michael?
right? It has absolutely stopped being weird. I want to say kind of the normalizing of Bitcoin as an investment for institutions, certainly kind of sped up throughout the pandemic, and with the money printing and the inflation and kind of the rationale for why Bitcoin that we've been talking about for years really started to kick in and hit home. It's like, that's what those guys were talking about, right? When they start to really kind of experience this firsthand for themselves, I think in their own lives, and certainly for returns as it related to various funds and businesses. And so, I do think kind of normalization of Bitcoin as an investable asset class, one, it's here. Number two, we've gotten here really without any of the big banks doing anything. Right. And so there's so much of kind of the traditional financial pipes and distribution channels that kind of the biggest banks in the world provide. We've gotten here to $2 trillion without them. So I do think the implementation of kind of the traditional Wall Street banking services and products will only expedite the growing acceptance of Bitcoin as an investment class. And we've seen over the last 3 years, the CME traction is basically 3x. Every year, it's a compounded annual growth over 3 years, on 3x on the futures volume. And I think that will continue to grow. I'm optimistic for a US-based ETF around Bitcoin, certainly within the next 1 to 3 year timeframe. And frankly, I do think we talked about Bitcoin as collateral. It is about as pristine and as perfect a collateral, I'd argue, as there exists kind of in the financial markets today. And I do think as more and more kind of companies get involved, I think they'll kind of come to that realization on their own.
Yeah, I mean, I've talked to some traders. They say they're like collateral calls are taking place, every few hours on a holiday weekend in the Bitcoin world. And of course, in the traditional world, you wait 4 days or 3 days and another day. It's very.
We've been through, so many Bitcoin drawdown days, and it's funny. Like our clients, I'd argue, are one, they're better risk managed. Because they know the volatility exists. And so their risk management systems are really, really good. And two, because of kind of the way the Bitcoin, like a lending market works, it's not that unfamiliar to get like two margin calls in a day, right? Like you could get margin called once, your post collateral prices keep dropping, you get collateralized again. But that's the beauty of blockchain, right? You could do it instantaneous settlement and be able to send assets on a Christmas morning if needed.
The protocol enables processes that are like a century ahead of the way that the traditional finance world does it. So I got a hard question for you. It's like it used to be, it seemed like most of the trading of Bitcoin was offshore on crypto exchanges. Mm-hmm. And then along comes the CME and it was a small thing. And then along comes, the Bitcoin ETFs, BITO and the like, and they're trading on the CME, and then Coinbase comes public. Mm-hmm. And you probably would know this better than I could figure out, but what's the dynamic between the trading of spot and futures onshore and offshore and through like regulated exchanges versus the unregulated exchanges? And have you seen any evolution or change that's of interesting or note over the past 24 months there?
I think ultimately the really difficult thing to kind of like pin down, one, I feel like the world is moving more towards the regulated camp. I do feel like more companies that have been unregulated previously are trying to become regulated in various jurisdictions. The
Certainly, yeah.
hard part ultimately is, takes Apple stock, for instance, that trades like on one exchange at the NASDAQ, and that's the way it is. It's like having Apple trading on like 50, 60, 100 different exchanges around the world, some regulated, some unregulated as it relates to Bitcoin, right? And so the challenge is, even if you regulate and create this thing, where does the liquidity ultimately lie, is one. But here's the thing, for institutions, they want to face regulated counterparties, right? And so as more and more institutions kind of get involved, I do expect more and more liquidity to come to more regulated venues. And liquidity tends to beget liquidity, right? And so
I got it.
I think that's the way it plays out.
Okay. So what kind of advice would you offer to corporations looking to integrate Bitcoin into their balance sheet or their P&L?
Most of the questions around holding Bitcoin, I think, have been answered. A lot of times before, you're like, I don't know how to do this. What's the law? What's the accounting treatment? All of that stuff have been answered, over the past few years. And certainly the legality of holding Bitcoin, it's perfectly legal to buy and sell Bitcoin. There's no issues, tax rules, all of that is very clear. For corporations around the world, I do think it's important that you have a view. Pro or con,
a strategy.
I do think it's certainly within your fiduciary responsibility as an officer of a company to have done the analysis to figure out whether putting Bitcoin on your balance sheet is a prudent thing to do today, 1 year from now, 5 years from now. And even if your decision is no, you've done the homework to kind of ultimately figure it out. Okay. I feel like there's too many companies that are like, I don't know what my strategy should be. And to me, that's probably the place where you don't want to be, right? Sure. It's important to kind of do the homework, do the diligence, study the possibilities, because, and we say this all the time, this isn't going away. And Bitcoin as an asset class, we all know is here.
Okay. So tell me about Genesis plans for the future, your product strategy, your vision for the firm.
Ultimately, we've been trying for the last few years to kind of replicate kind of that traditional prime brokerage experience that folks kind of get in equities and FX and kind of other markets, and kind of bring that to the crypto space. And we've now been able to marry kind of the spot trading, the derivatives trading, the borrowing, lending, custody under one like trading platform, and for guys to interact either on platform or via API or by voice. We still have lots of folks still wanting to call and talk to traders, get market color. Hey, what's happening? Before I pull a trigger on a $5 million trade, people still want to know what's happening in the marketplace. And so we're still a very white glove, high touch service on one part of our business, but also like 95% of our trades is done via API, right? And so it really kind of is kind of this marriage of white glove traditional service with kind of the technology, with a lot of ultimately guys kind of pipe into. My expectation is I do expect the banks that we were chatting about earlier to get more and more active in the space. I do think that we will come up with like more bespoke. I mentioned structured products earlier. That's squarely on the roadmap for 2022 for Genesis. To get more products with kind of Bitcoin as the reference asset, to kind of out to the customers. And again, for us, we've gone, like I said, we've gone from 30 to 200. We'll probably double our headcount again throughout 2022. But it's all about, more and more countries, more and more companies, more and more institutions are kind of waking up to Bitcoin as an asset class, and it's our job to really try to bridge that world kind of between Wall Street and crypto.
Very cool and exciting. The growth is impressive. Do you have any final words for the corporations in the audience today?
Well, I do think the role of CFOs, the role of treasurers has really evolved. Before, kind of the CFO might have been the head finance accounting numbers guy. I do think that more of these folks are now focused on strategy. How do we plan for ultimately for the future? And I do think, again, that it's really, really important to like focus on at least figuring out how Bitcoin ultimately kind of like fits in. And this is the institutions, corporates is who we serve. That these are the only clients we ultimately have. And we have as much experience as anyone in the industry to be able to do it and kind of hold your hand and answer questions, regardless of whether or not you end up making the investment or not.
Wise words. Thank you for joining us today, Michael, and best
Thanks
of
for
luck
having
in the
me.
coming year.
Appreciate it. Thank you.